In this video, we're going to take a look at something called, a little accounting trick called reversing entries. Reversing entries, kind of, like I say, a trick used by accountants to sort of compensate for some stuff to make other people's lives easier. It'll make more sense, hopefully, as I go along and explain it. Things to remember, reversing entries are prepared the first day of the new accounting period, so they're always posted if your new year starts in January, January 1st. If your fiscal year starts in July, it'd be July the 1st. And they're prepared for adjusting entries where we had to make changes, accruals to assets and liabilities. Now, if you're not comfortable with adjusting entries, I would suggest you go back and maybe review that material just a little bit before going on. Because what we're talking about reversing here is reversing some of those adjustments we made. So why do we use reversing entries? Well, I've put this little hopscotch picture in here just to think about how hopscotch is played. Hopscotch, you toss the stone, you hop all the way up to the top, you walk all the way to the back, pick up your stone, and you get to the end and you stop. And it seems like you've done a lot of work to get right back where you were when you started. Kids love to play hopscotch until they find out that they've done a lot of work to get right back where they started, and they tend not to play it so much anymore. But it's fun to be around kids when they're having fun. Reversing entries will probably look a little bit like that to you, like it was a lot of work to get back right to where we started out. But they do serve a very powerful purpose. Let me start off by looking at a very simple example here of when a utility bill shows up. So here's our utility bill showing up. We're in the middle of our year. It's January, and now we're into February. And we get the utility bill for January. Now remember, this is the bill for the power that we used in January. So really it's a January expense. But we record the bill when we get it. We debit utilities expense for the power that we used, and we record an account payable being the amount that we owe to the utilities company. Pretty straightforward stuff. If we had paid it immediately, we'd have debited or credited cash instead of crediting accounts payable. So time passes and we decide that we want to pay our bill. It's about March the 8th, let's say, and we decide to pay the bill. So we're going to debit accounts payable to reduce the amount we owe to the utility company, and we'll credit cash. You'll notice the utility expense doesn't get any part of this entry. So we reduced the amount we have owing, and we've paid the bill. And remember, this is the bill for the power in January. We're just getting around in March to paying for the power that we used in January. And that's the way the year cooks on all year long. We record it, and eventually we pay it. But now consider that it's December the 31st. It's the end of our year, and we know that we used power in December, but we didn't actually receive the bill yet. And this is when we have to make an accrual. You remember that with some sort of fear and trepidation. But so we accrue this amount that we owe the utility company. So we debit the expense for the power that we used in December, and we record that we owe the utility company the $500. Now we don't know that it's actually $500. That was just an estimate. And this is the bill for the power that we used in December. Now this looks just like the entry we made a couple of seconds ago for when we actually get the bill. But we've accrued it. It looks like that entry, but this is actually an accrual. Okay, so now we move on into the next year. Or sorry, before we do, we close out that account. Okay, so as part of the year-end process, we do a closing entry. That utilities expense gets zeroed out. If you remember, closing entries where we zero all the expense accounts and zero all the revenue accounts and the drawings account and income summary. There's also, if there's a credit to utilities expense there, remember there's a corresponding debit to income summary. If you're not familiar with how that works, go back and look at closing entries. So here we are now, it's the end of the year, utilities have been closed out to zero. We still have recorded that we owe somebody $500. Well, time passes, and in fact, in January, like clockwork, the bill shows up from the utility company. And just to keep it clear, I just want to point out that the utility company, when they sent us the bill, it actually turned out to be $518 instead of $500 because we rarely guessed correctly. But we were pretty close. So we record that the way we normally record it. We debit utilities expense, and we credit accounts payable because that's what we do when we get the utility bill. We don't pay it right away, so we debit the expense and credit the payable. In this case, in this example, I haven't used a reversing entry. And I want to show you the problem that occurs. We now appear to owe the utilities company $518. But we don't. We only, or sorry, $1,018. We really only owe them $518. There was the 500 that we estimated at December 31st, and then the actual bill when it showed up on January the 10th. And it looks like we've got this $518 expense. That doesn't throw us so much, but this is definitely wrong. You know and I know that we don't owe them $1,018. And this is where reversing entries come in really, really handy. The reversing entry would work like this. On January the 1st, we'd basically undo that adjustment that we made for the accrual of that bill that we hadn't received yet. So it's just an entry that looks exactly like the accrual, except in reverse. That's why we call it reversing entries. So we debit accounts payable and we credit utilities expense. So what's happened, in the expense account, there was our original accrual of $500. On December 31st, we closed that out to zero out the account. And now we're going to, when we put through this reversing entry and post it into the account, we're going to have a credit balance in the utilities of $500, which seems a little odd because expenses normally have a debit balance. It's just kind of a temporary situation that exists because of closing or reversing entries. The accounts payable, because technically we haven't received the bill yet, until we get it, we sort of pretend we don't owe the utilities company anything. And so now it looks like we owe nothing, and then we wait for the bill to show up. So now when that bill for $518 shows up, and we process it like we normally process it on January the 10th, we'll debit utilities expense for $518, we'll credit accounts payable for $518, so now we owe $518. That was the bill. If we take a look at what the balance is now in the utilities expense account, it's $18. The reason it's $18 is because we didn't know when we did the accrual that what the actual bill was going to be. We estimated it at $500. We were pretty close, and so $18 is not going to bother us too much about that. Okay. So you're going to have to read up on this. Nothing like practice. Remember, reversing entries are just an undoing of some of the accruals, not all accruals, but some accruals. It'll take some practice to figure out which ones are which. And so practice, be like these people. Practice, don't be like, say, these people, or more like those guys, but less like these guys. So practice, practice, practice. By the way, these lyrics assignments, they're not the mandatory ones, but they're excellent practice for looking at reversing entries and a little review of adjustments as well. And good luck with that.